The gold price has soared this year as investors have looked for a safe haven and a hedge against inflation. Yet the price tumbled in recent days, although it has made up some of the losses. Francois Nordof from Banque de Commerce et de Placement has more than 2 decades of experience in the banking industry and joins me now. Francois, everyone was saying buy gold, so this move has really caught some investors off guard.
Yeah, that's true. I mean, we have seen recently some of our competitors issuing research on gold, and we have seen target prices of above $3,000, which appears to be extremely aggressive. I mean, most investors just should keep in mind that gold is a conventional asset class, even if it's classified under the alternative asset classes. Doesn't mean that gold will have no volatility. I mean, gold is a commodity. Commodity is extremely volatile, and therefore gold, the correction that we have seen within gold is just a normal event. It's nothing special. Moreover, we should just keep in mind also the appreciation of gold during the August month, just reflecting fears of investors. I mean, those hike in gold price are just irrational. Therefore, the correction that happened in the recent 3 sessions, where we lost roughly 11% of the share of the gold price within 3 days, is just something conventional.
So why did the gold price drop so much over a relatively short period of time?
The correction is mostly generated by the announcements of the twist operation of the Fed, where the Fed was just saying to investors, okay, we're going to purchase long-term treasury bills and we will sell the short end of the curve. This will have indeed an impact, immediate impact on the dollar. And there is clearly, on the long term, a negative correlation between the dollar price and the gold price. And we have seen quite a significant strengthening of the US dollar. Maybe investors are short-minded. The appreciation of the dollar is also negatively correlated to other currencies, like commodity currencies like the Australian dollar, the Norwegian NOK, the rubles, and the reals, for speaking about the most important commodity currencies. Another thing that we should keep in mind currently for the correction that happened to gold, some big banks are facing liquidity squeeze and are looking for getting back into the capital markets, and capital markets are unfortunately just closed for the time being for them. Then banks are looking to alternatives to refinance themselves. And what are they doing? We have seen some big French commercial banks selling gold reserves because they had some hidden reserves in their accounts on their gold position, because those were investment portfolios and not trading portfolios. They were not mark-to-market. Value of their gold positions were extremely low. Therefore, for them, it was a good opportunity to benefit from a gold price above 1,600 to sell existing positions, to generate hidden reserves and to reestablish some capital adequacy ratios. If we look to a longer term on gold, I would say gold remain a perfect hedge against inflation. Currently, investors are not at all concerned by the inflation issue, but we should keep in mind that printing paper, as the Fed is doing it, as the ECB is doing it, as the Swiss National Bank is doing it, and as the Bank of Japan and Bank of England are doing it, to a certain extent, you will generate inflation in the long term.
So do you have any price targets for the end of the year?
Yeah, we are at least we should go back to 2,900. That's our objective in the very short run, and this is also driven not only by inflation fears and Greek debt, but also by keeping in mind that industrial demand will stay very strong. India and China are going to have a GDP growth around 6% or even above. Therefore, also here we have a support, and moreover, we should also not forget that gold is a limited resources, and that the production costs of gold are going inevitably to rise, and the marginal profit you can generate on gold extraction is going to decrease, and therefore you have also here a bottom for gold prices, which clearly means gold price in the long term are going to appreciate also, even if real interest rates, which are currently negative, are going to move positive, but it's going to be in 2-3 years from now on. So we can still believe that there are sufficient reasons for gold to appreciate in the next 3 to 6 months, and therefore we stick to our objective of $1,900.
Francois Nordof there predicting the gold price to rebound. Coming up later on Dukascopy TV, I'll be talking to one of the biggest names in the Belgian financial world about the country's ongoing political deadlock and whether it is next in line for intense market scrutiny. Goodbye for now.